Hey everyone, Liz here, Chief Analyst from BG Trading Australia. Australian stock market is not a good long-term investment. I'm going to share with you my thoughts why I actually don't believe that Australian stock market is a good long-term investment. I'm also going to tell you how we can make money out of the stock market and prove to you that a lot of so-called blue chip stocks would give you a negative return over the last 10 to 15 years. Let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more. On this channel, for if you like, please share this video with someone that you believe would be interested. Also, subscribe and like the video. Now, let's jump in straight into what we wanted to talk about. Australian stock market hasn't been a good long-term investment. I'm going to show you. This is the SP 200, the top 200 companies index in Australia. As you can see here, in 2007, let's say you started investing in 2006, 2007, and if you bought at the peak here in 2007, you would be losing money. I mean, your investment capital, unless you reinvest the earnings from dividend, okay, you would be losing capital, which is not a good thing. Whereas real estate, you would have made so much more money. But it's not all the stock market. US, if you have done SP 500, comparing to 2007, which SP 500 was worth about 1,500, then you'd more than doubled your money as today. So Australian stock market hasn't been a good investment. Now, the so-called blue chip stocks, if you talk about, if you go to any financial advisor or some so-called stock market analyst, what do they tell you? Buy good quality companies like blue chip stocks, right? But not all of the blue chip stocks. And one of our heaviest blue chip stocks, BHP, which are Australian flagship iron ore miner, actually has actually done a very mediocre result. Look, this in 2008, 2007, 2008, BHP was actually worth about $70 in Australia. Actually, this is not Australian one. This is US one. Let's go to Australia. Now, everyone talks about, everyone has to have a BHP on a portfolio, right? Look what happened back in 2008. BHP was worth $45. That was the peak. And then 2011, $44. That's for 2011. Now, 10 and 12 or 13 years later, look what the stock is worth now. $40. That's worse than 10 and 12 years ago. So now how can you invest into a stock like this and expect it to do well over the last 10 years? You would have lost money, lost capital if you have to sell now. Or most of the time, as you can see here as well, BHP was worth less and a lot less than actually when it was. Obviously, BHP is a company that exposed to iron ore price, that's commodity, and that's the problem with Australian stock market. A lot of the market is exposed to commodities, and we know that cyclical goes up and goes down, never really keeps going up forever, and that's the problem. Now, another stock that is not commodity, but it's technology stock, infrastructure, I would say, is Telstra. If you have invested in Telstra back in 2005, and that's 17 years ago, the stock was worth in $4.50. And then 2008 was worth in $4.86, even almost $5. And then we have the peak here in 2015, where Telstra is worth in $6, and now worth in $3.80. This is a flagship company for the Australian stock market. And everyone talks about having to have Telstra in a portfolio. This is a dividend stock, but how good is a dividend stock paying good dividends if the very same value of the stock that you invested doesn't go up but goes down? That makes no sense to me as investment. Now, the other one, now let's talk about bank finance, okay? Apart from CBA, Commonwealth Bank, and Macquarie Bank, the other banks are all underperform. So, in fact, this is ANZ Bank, one of our most favorite banks from investor and manager funds. In 2007, it was worth about $30 a share. Then went up to $36 in 2015. Now it's worth $24. Yes, it does pay some good dividends, but we back to the same problem. How good is a company paying dividends if the value of the investment doesn't go up? Unless you're reinvesting the dividends. I don't like that as investment. Now, in comparison, there was some good stocks, like Macquarie Bank, for example, which back in 2005 was back in 2008 was worth about $80. Then 2010, $30. Then 2015, $82. Now it's worth $150, right? So there's some good companies out there. Also, CSL, exceptional, fantastic company. Back in 2008, it's worth about $39. Now $280. That's some of the comparable US stocks now. But same as in US, for example, Meta, we'll talk about technology and show you that not every company tends to do well all the time. So Meta went up all the way to $370 and then now $138. Massive drop. And obviously, this is to do with technology. Now, what is the point here? You don't invest on the stock market and leave the money for 2 years or 10 years. I'm going to invest for 10 years. Okay, there's no sense on this strategy. This is not a good strategy. It makes no sense. You need to invest on the stock market at the right time, at the right moment, and then you have to have not a lead time, but a price target time. Stock market is all about trading, and this is because stock market is a highly manipulated investment tool. It's manipulated by the big banks. Thinks it's possible to short the stock market, short stocks. What is the sense of investing into an asset class that can be shorted at any time? Right? Make no sense. So what we need to do is understand the concept of stock market is, in order to have a successful, there's two ways. One, you pick up the best companies on the market, which is I won't say it's impossible, but it's really hard to do it. Okay, or you trade the companies. Buy at the bottom of the cycle and sell at the top of the cycle. That's what best way to make some compelling money with the stock market. And sometimes a long-term strategy, let's get back to BHP, for example, right? If you have invested back in 2007 when BHP was trading at $40, okay, I'm going to put the money for 10 years on BHP, 2007. Look at 2017, you would have lost money, right? But if you have a target in mind, then you still would have lost on this stock, unfortunately. But let's say, for instance, I want to make 20% out of this BHP when I was trading at $40, and then you would have sold at $50 10 years later. Not a good example though, unfortunately, but that's reality. So therefore, BHP is not a good stock to buy when it is at the top of the cycle. Again, you don't buy at the top, you buy at the bottom, because if you have bought at the bottom, you would know that this is too high as per the chart formation, and I cannot buy something that is extremely high. I'll buy something that is extremely low, and I would have bought around here, and then you made some good money out of this trade. So it's all about trading. As you can see here, if you haven't traded here, you would have to wait another 10 years to be able to achieve the same price. So not a good investment at all. Unfortunately, many stocks like this, NZ, Westpac, NAP, all like this. Again, exception to Commonwealth Bank and Macquarie Bank, Macquarie Group. What's the point of investing in the stock market? Again, if stock market is all about trading, you buy stock when it's low and sell when it's high, right? This is what we believe stock market is all about. And then what we do with the money, we invest in real estate, in a solid asset that cannot be, or at least not in the same level, be manipulated. You cannot short properties. You cannot sort of control supply of properties. You can only control so much. And the only way to control property prices is via interest rates, which is a much more complex tool to change, because they affect the whole economy of a country and the whole economy of the world. So you cannot control property unless you produce in massive amounts, which doesn't happen, and it's impossible. This is my view on the stock market, and this is why I believe the Australian stock market is not a good long-term investment. Stock market is all about trading. You buy, you wait, and you sell, and then you look for opportunities in different markets. That's what most of the investment gurus do it. And you need to learn how to do it yourself. Otherwise, you're going to see yourself buying something that makes no sense for you, but most of the sense for the person who is actually selling the managed fund or whatever they call in terms of investment. Guys, this is my view on the long-term investment on the stock market. If you want to argue, please put in the comments below. I'll be more than happy to open a discussion with you. See you in the next video. Bye. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand, and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course. Shorted